Imagine a company selling everything from tea to steel, from cars to software, from jewelry to airlines. Now imagine that company's combined market value surpassing the entire GDP of a neighboring nation. What's remarkable is that in February 2024, the combined market value of this group of companies crossed a staggering 365 billion, exceeding the estimated GDP of Pakistan. That's no fantasy, friends, it's the reality of the Tata Group. In this video, we'll discuss a favorite among investors, a name that resonates with trust and good management, the Tata Group. We'll explore the diverse sectors it operates in and analyze the performance of its companies. We'll also delve into the recent IPO of Tata Technologies and any upcoming debuts on our exchanges. Finally, we'll unveil some key highlights and ponder upon the factors that make Tata India's #1 brand. Let's begin. You're watching The Informed Investor, an initiative by ResearchAndRanking. In the ever-evolving Indian business landscape, the name Tata Group has become a symbol of quality, innovation, and ethical business practices, spanning more than 150 years. Founded by Jamshedji Tata in 1868 as a trading corporation, the Tata Group has transformed into a global enterprise headquartered in India, comprising 30 companies across 10 verticals. This group operates in more than 100 countries across 6 continents. It stands as one of the oldest and the largest conglomerate in India. Interestingly, all these companies create employment opportunities for over 10 lakh people. These numbers are not merely a reflection of financial strength, but it shows the immense contribution that the Tata Group continuously adds to the Indian economy. And guess what? The combined market value of all Tata Group companies has surpassed $365 billion or more than 30 trillion. This is more than Pakistan's GDP, which the International Monetary Fund estimates to be roughly $341 billion. Another interesting fact is Tata Sons is the principal investment holding company and the promoter of all Tata companies. What's remarkable is that 66% of the equity share capital of Tata Sons is held by philanthropic trusts which support education, health, livelihood generation, art and culture. Shapoorji Pallonji, or rather the Mishra family, own about 18.4%, followed by Tata companies combined have an ownership of 12.9%, followed by the Tata family, which own a mere 2.8% of the entire fortune. Now let's move on to the business of the conglomerate Tata Group. In simple words, a conglomerate is a multi-industry company. A conglomerate includes one group that overlooks multiple business entities in entirely different industries. Examples of these massive groups in India are Tata Group, Reliance, Adani Group, Bajaj Group, Aditya Birla Group, etc. There are businesses operations in several sectors and industries. If you see the image on the screen, Tata Group has a diversified range of companies with operations in 10 different industries like FMCG, jewelry, retail, chemicals, communications, hotels, airlines, etc. Although the Tata Group has more than 100 subsidiaries, there are 16 publicly listed companies of the Tata Group on the NSE and BSE, with some of the heavyweights like TCS, Tata Motors, Trent, Tata Steel, etc. If we take into consideration the estimated market value of unlisted Tata companies like Tata Sons, Tata Capital, Tata Digital, Tata Play and Tata Advanced Systems, and the airline business, Air India and InvestoRR, among several others, the might of the Tatas can easily grow by another $160 to $170 billion, if not more. Now that we've spoken about the presence in different verticals and industries, let's look at the top 5 performers among the Tata Group. The IT major TCS is the crown jewel of the Tata Group's listed business with a market value of almost 15 trillion rupees, approximately $170 billion, making it the biggest IT player in the country. So anyway, TCS is a prominent player in the global IT services industry, offering a comprehensive suite of solutions encompassing application development, infrastructure management, and business process outsourcing. And as you know, India exports most of its IT services. TCS derives only 6% revenues from the domestic market from India. The rest 94% comes from the Americas, Europe, Asia Pacific, Middle East, and African regions. In terms of verticals, BFSI, consumer business, life science, and healthcare are the top 3 sectors that contribute about 58% of the revenue to TCS. Looking at the financials, the revenue has grown at a CAGR of 9.7% over the last 7 years and reached a massive 2,25,000 crore of sales recorded in fiscal year 23. The operating profit margins have stayed healthy around the 26-27 mark, with the latest net profit reading at 42,303 crores. The highlight of the company is that it maintains superior ROCE ratios and reached its highest 59% return of capital employed in fiscal year 23. An interesting fact is that in the last 6 years, the company has issued 5 share buybacks, showing the practices of returning excess cash to shareholders, thereby increasing shareholder value in the long term. As a result, the shareholding pattern of TCS looks something like this. A majority, 72.41%, is held by the promoters, which is Tata Sons, followed by FIIs at 12.4% and DIIs at 10%. Next up is another behemoth of Tata Group, the Tata Motors. To start off, Tata Motors is a leading global automobile manufacturer and India's market leader in commercial vehicles and among the top 3 in passenger vehicles market. Founded back in 1945, they've been around for decades, building a reputation for reliable and fuel-efficient cars. Currently, they have a product portfolio offering commercial vehicles, passenger vehicles, luxury vehicles, which is Jaguar Land Rover business, and recently forayed into electric vehicles. Apart from these, they also operate in the vehicle financing business referred to as Tata Motors Finance. Interestingly, a major chunk of revenue, about 2/3 or 68% of the revenue, comes from the luxury segment, which is a Jaguar Land Rover business. Second comes in the commercial vehicle segment with 18%, followed by passenger vehicles at 12%. At 1% comes the others, which basically includes the IT services and the insurance broking services along with the vehicle finance segment. Coming to the financials, Tata Motors recorded revenues of 3.45 lakh of revenues in fiscal year 23 and maintained operating margins of 9% in the same year. If you look at the net profit line, Tata Motors finally posted profit in fiscal year 23 of 2,690 crores after running into losses for 4 years. This is because of overpriced acquisitions, impairment loss recognized in the view of changing market conditions, especially in China, and technological disruptions that dampened sales for the 4 years. This almost pushed the company to the brink of bankruptcy, wiping out its equity base. However, it made a strong comeback in fiscal year 24, and recently, in January 2024, Tata Motors surpassed Maruti Suzuki's market cap, reaching 3.15 trillion compared to Maruti Suzuki's 3.13 trillion. Ending Maruti Suzuki's 7-year reign, Tata Motors reclaimed the title of India's most valuable automotive company. Lastly, when looked at the shareholding pattern, the promoters Tata Sons owns about 46.3%, followed by FIIs and DIIs at 18.6% and 17.2% respectively. Retail investors or the public hold about 17.6%. The third company we'll talk about has become a household name in India, synonymous with style and sophistication. Did you know Titan is the world's 5th largest watchmaker? Over the years, Titan has diversified into jewelry under Tanishq and eyewear with Titan Eye Plus, catering to various tastes and needs. They even have a youth fashion brand, Fast Track, with over 2,900 stores across India. Titan has established itself as a leading lifestyle brand, offering something for everyone from jewelry to accessories. Although Titan started as a watch manufacturer, currently the jewelry segment under the brand name Tanishq contributes the maximum to the revenue. It contributes about 88% of the total revenue of the company, while watches and wearables contribute 9%. Coming to the financials, Titan recorded revenues of 40,575 crores in fiscal year 23 and has grown at a CAGR of an impressive 17.3% from fiscal year 17 to fiscal year 23. The operating profit margins were decent at the 10% mark, and the net profit grew to 3,274 in fiscal year 24, again growing at a remarkable CAGR of 25% from fiscal year 17 to 23. The return on capital employed, or ROC, maintained healthy at the 25% mark in fiscal year 23. When looked at the shareholding pattern, 52.9% is held with the promoters, followed by FIIs and public at 19% and 17.7% respectively. An interesting fact to know is that Titan now shines bright, making it on the list of the top 100 luxury good makers at the 24th position on the Deloitte Global Luxury Goods List 2023. Another company that is making big moves is Trent Limited, which is engaged in the retailing of apparels, footwear, accessories, toys, food grocery and non-food products through various of its retail formats. You might know them for their popular chain of departmental stores called Westside. But that's not all. They also run Zudio, offering fashion at reasonable prices, and even have hypermarkets called Star Bazaar for your everyday grocery needs. Founded in 1998, they've grown from a single brand to a diverse group catering to different styles and budgets, boasting more than 780 stores as of 31st December 2023. In terms of segment contribution, Zudio has climbed the ranks and contributes about 53% of the revenue. Since its launch in fiscal year 17, Zudio has experienced impressive growth and has even overtaken the long-standing Westside in terms of the revenue. Westside, on the other hand, brings about 46% of the revenues. Interestingly, the apparel business contributes about 84% of the turnover, while non-apparel contributes 16% of the total turnover. Coming to the financials, Trent Limited posted revenues of 8,242 crores in fiscal year 23, growing at an impressive CAGR of around 25%. Interestingly, even the net profit has grown at a CAGR of 25%, showing its emergence in the retail sector, especially in the fashion space. And recently, Trent went on to be the fifth Tata Group company to hit the mega milestone of 1 lakh crore market cap. The last company we'll talk about is Tata Power, which is a major player in India's energy sector, not just generating electricity but also transmitting and distributing it. They're like the whole package deal when it comes to powering homes and businesses across the country. Founded back in 1910, they've grown into one of India's largest integrated power companies, even venturing into renewable energy sources like wind and solar power. They're committed to a sustainable future and are working towards reducing the carbon footprint. While India has ambitious targets of achieving 500 gigawatts of renewable energy capacity by 2030, Tata Power has taken some bold steps to address this. It has deployed 45% of its capital to the renewable sector with an estimated capex of around 60,000 crores till fiscal year 27. And Tata Power is confident about growing profits from its core business, translating to a growth of 2x by 2027 as per the company's statements. Coming to the financials, Tata Power recorded revenues of 55,000 crores in fiscal year 23, growing at a CAGR of 10.3% for the last 7 years. It also reported healthy operating margins of 14% and a net profit of 3,810 crores in fiscal year 23, a growth of 76% from the previous year. In terms of shareholding, the promoters hold about 46.8% in the company, while the public and retail investors come second with a holding of 26.8%. Another interesting fact to know is that Tata Power is the market leader in public charging segments with 55% share and 85% share in home charger installations. With the increasing EV adoption over the last few years, Tata Power has witnessed exponential growth and will continue to lead the market share as it has several partnerships with government agencies as well as private companies to provide them with charging services. Additionally, it has signed a multi-year power purchase agreement or PPA with BlueSmart in a move to support sustainable transportation. This agreement ensures the supply of green power for BlueSmart electric vehicles fleet. Moreover, with the Prime Minister announcing the Pradhan Mantri Suryodaya Yojana, under which rooftop solar panels will be installed at 1 crore households, Tata Power is expected to get big opportunities as they are a key player in manufacturing solar modules. To quickly summarize, let's look at the list of all listed Tata Group companies in the Indian markets. TCS, the crown jewel of the Tata Group, has a market cap of 14.78 lakh crore and has delivered over 180% returns in the last 1 year and more than 600% returns in the last 5 years. Tata Motors, with a market cap of 3 lakh crore, has delivered over 100% and 400% returns. The standout performer over the past year has been Trent, delivering 200% returns in the last year and over 1000% in the last 5 years. Tata Teleservices, one of the companies with the least market cap, has delivered over 2500% returns in the last 5 years. The only company that has been a dragger and delivered negative returns in the past 1 year is Tata Chemicals. Now that we've finished the best performing companies and a whole summary of the Tata Group, let's have a quick look at the recent IPO of the Tata Group and explore any upcoming IPO. As you guys are aware, Tata Technologies, which provides engineering and product development digital services, especially to the OEMs, recently debuted on the secondary exchange. But did you know Tata Tech IPO was a highly anticipated IPO and it was Tata Group's first IPO after a long gap of 2 whole decades. Prior to this, it was TCS which debuted on the exchanges back in 2004. Interestingly, the issue size was around 3,000 crores and it was oversubscribed by 69.43 times, with QIBs or qualified institutional buyers oversubscribing the quota to the tune of 203 times. What's even more remarkable is that the IPO had a blockbuster bumper listing of 140%, and it even surged to 180% on the listing day. This superb listing gain could also be attributed to the Tata parentage tag, which enjoys preference among the investor community. As per sources, the Tata Group is set to launch more IPOs soon. After being classified as an upper layer NBFC by the RBI last year, Tata Sons needs to go for share listing on or before September 2025 to avoid higher regulatory compliance. Likewise, even Tata Capital comes under the same category and must conduct an IPO by 2025. On the back of this, Tata Capital shares have been soaring in the unlisted market. The other notable names include those of Tata Autocom Systems, Tata Play, which in fact became the first firm to file confidential DRHP with SEBI, followed by Tata Advanced Systems, and lastly, the e-commerce grocer Big Basket set to come out for IPOs in the future. To conclude, the Tata Group stands as a testament to enduring success, innovation, and ethical business practices over its remarkable 150-year journey. A vital attribute of the Tata brand has been its pioneering spirit. They were the first in India to establish a steel mill, a power company, five-star hotel, and an IT services company. This spirit extends to everyday products, with Tata being the first to brand salt, jewelry, and retail steel in India. But interestingly, the Tata Group's impact extends far beyond its financial success. Through its philanthropic trust, it contributes significantly to education, healthcare, livelihood generation, and cultural preservation. Initiatives like the Tata Institute of Fundamental Research, the Tata Medical Center, and the Tata Trust touched countless lives, making a real difference in society. In context, in fiscal year 19 alone, their CSR programs impacted over 11 million lives, with over 1,000 crore invested towards these initiatives. And no wonder it is India's most valuable brand, with a brand value of $26.4 billion. And that's not it. Tata Group also happens to be the only Indian brand to feature in the top 100 of the world's top 500 most valuable brands. So the next time you see the Tata logo, remember it represents more than just a business empire. It embodies a legacy of trust, innovation, and social responsibility, inspiring generations to come. To finish off, I would like to highlight something that Mr. R.K. Krishnakumar, the former director at Tata Sons, shared, which truly reflects how the mere mention of Tatas evokes respect and recognition. Having said that, this is me, Ralison, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.